the important factors also here. Important techniques also we have here. Different values will be there. That is appreciation value, economic scale, different scales will be there. So we will try to discuss this one. So dear friends and students, when we're talking about inventory, that word, inventory actually English word, American word. So this word equal to the English, British English. So it term shows that stock, which means, or this inventory refers related to the goods and materials. So it is a discipline. Inventory is a discipline which talks about the shape and placement of stocked goods. This concept inventory is talk about the stock or work process, work hierarchy, work process, and it has been extended from the manufacturer to the service organizations. So in the first concept, what we are talking in the introduction, inventory is nothing but inventory, the word is an American word. It is equal to the British English. According to this inventory word, which refers, it's related to the meaning of goods and materials in organization. So this inventory is a discipline or is a subject which talks about the shape and placement of stocking goods. So what is the shape of goods and how we can stock these goods? It will talk about that one. And the inventory concept especially focusing on all works which are involved in the work production process. Means inventory will be start with the all works from the initiation of raw material to finished goods. So all works within the process of production, all works that is occurred prior to the completion of production. For example, we have one raw material is here, ore is here. So that will be start from the inventory. Inventory start with the ore, after collecting ore to making or before making that iron or steel something. That is a finished good. So it doesn't mean that inventory process is an activity which will start from the collection of raw material to before the or prior to the completion of production goods. I hope this is very clear to everyone. Here, in this context of inventory, the manufacturing production system, inventory refers that all works that has occurred, raw material, particularly finished products prior to sale or departure from the manufacturing company. So that is called inventory. So in this meaning, inventory is nothing but services. Inventory refers to all works done prior to the partial process of information. So in the introduction, what we learn? Meaning of inventory, we have learned about this one. In simple words, we can say that inventory is related to the all works. Collection of raw material to before the, what we call finishing goods, or we can call manufacturing goods. So that comes under the inventory. That is the introduction in the inventory. Then go with the meaning of inventory. Inventory management. So that is the inventory. Inventory management. So that raw material collection management, storing, buying, or what you call processing, or forecasting that material and good, everything come under management. Management is nothing but managing the affairs. What affairs here managing? Inventory management. Inventory management is nothing but that raw material. For example, you are purchasing from some XYZ. So that how you can manage it, how you can collect it, for what rate, what price you are collecting that raw material. And when you collect the raw material, how you are going to transfer that raw material, how you are going to store that raw material. So that comes under the management. That is called inventory management. So when we're talking about, dear friends, inventory management is nothing but it is an act of keeping track of organization stockage goods. So we are tracking that organization goods, how it will be goes. So we are going to track that one. So monitoring their weight, dimensions, and location, amount, everything will come under. So here, inventory management is nothing but tracking of organized stocks and goods, dimensions, and location of the particular good storage, and what is the amount or price of that one, it will come under. So here we can say that one. Inventory management is nothing but organization of goods and monitoring the weight and amounts and location will come under. So the main objective of inventory management. So we are talking about inventory management. So what is the inventory management? Inventory management is nothing but keep tracking or looking after the organization stock, organizational goods will come under. So that goods, location, amount, all will come under. The inventory management, IM main objectivity is that management to minimize the cost of the products or cost of the raw material. So simple words, we can say that one. To reduce the material cost, we are doing the inventory management. So for less amount, we will purchase that, we will save that. So when we are saving that or storing that, that is the inventory management. Here we can say that one. This inventory management is also called, is a process of supervision of non-capitalized assets. Non-capitalized means it's not capitalized. Capitalized means getting some amount. When we will get the amount, whenever we finish the goods means when it is the good is completed, then that is a finished goods. For example, one motorcycle is here. Different parts they will sell in the stores. So that different parts together they are joined and they will sell in the storage or what you call stores, vehicle store, something. So that is before that is a non-capital asset. So that is the inventory or stock items. So what does mean in this inventory management? It is also defined the process of supervision of inventory or the stock items. So this is a inventory management. So inventory management is nothing but it's a supervises flow of goods from manufacturer to warehouse. Means manufacturing company to warehouses. Warehouses means where we are keep our goods, completed goods or finished goods we are storing. Showroom we can call in simple words. For example, cars we are manufactured. That cars can be kept in one safe place, safe custody. That can be called as a warehouse or stores we can call. So that is this thing. So the main objective of inventory management here to determining or controlling the stock level. So if excess stock will be there, immediately that inventory management inform to the managers. So we have sufficient stock. No need to purchase further particular period. So if they have the lesser stock, deficit stock, then in that they will inform that. So we need stock. So this is about the objective of inventory management. Then go with the scope of inventory management. Scope is nothing but limitation. So what is the limitation of inventory management? Means the limitation of inventory management. This inventory management begins with the collection of raw material to finished goods. So it will relate it. So it will decide the amount, dimensions, location of this one, price, everything will come under the scope of inventory management. So go to the next concept of inventory management. So in the inventory management, what are the objectives? So when we are practicing this inventory management, so what are the advantages? That is called inventory management objectives. I think my voice is clear to everyone, audible to everyone.
Not clear.
Now?
Slow sense voice.
Ayo, acha, then raise just silent voice. Okay, na? Okay, then objectives of inventory management. So there are a number of objectives of this inventory management we have. So this inventory management help for the balance between the replacement lead time. That is the first one. And it helps for the cost of inventory. And another thing, another objective of this one, forecasting. Forecasting is nothing but expecting or in future something is going to happen. That is called forecasting. So for example, in the market, some price will be there. For example, gold price. We are speculating, we are guessing. That is forecasting. So objective of inventory is that people will get the raw material when the material cost is very less. Then immediately they will collect it. They will take it. So within few days, the price is going to increase. They may have the indications. They may have the information through the different sources. So when they have the less price of the particular raw material or particular parts, they will purchase it. So here, that is inventory forecasting and inventory valuation. So they will evaluate that. And future inventory price forecasting. The price is nothing but amount forecasting. So it will help for the object of the inventory management. And another one is quality management. It helps for the quality management. So it will try to defect. It will try to control the defective goods. If any wrong goods will be there, the inventory management level, initial level, they will control it. Means they won't purchase that. So that is a inventory element, detective goods and demand forecasting. So for example, one goods they are going to purchase it. One raw material they want to purchase it. Few parts they want to purchase it. So whether that goods or that material in future we may have the good demand or not. So market is nothing but, dear friends, it's based on demand and supply. So demand, if in the market we have demand, then we need to sold out. So these are the objectives of the inventory management. So in examination point of view, we need to write at least 4 to 5 points. No need to analysis, but you need to write these main points. Once again, repeats you. The objectives of inventory management is that it will try to balance the replenishment lead time and carry the cost of inventory. So inventory forecasting, it will help for that. Physical inventory will be there. Available of physical space will be there. And the replacement will be there. Defective goods will be there. So all will comes under the objectives of inventory management. So next to go with the, after the objectives of inventory management, we will go with the other concepts. So in the inventory management, other concepts which are come under time. So time lacks the present, the supply chain. So the suppliers, from the suppliers to user at every state require that we need to maintain certain amount of inventory, which will helpful for the or used to lead the time. So however, the practice inventory is be maintain consumption during the variations in the lead time. So time is very important in the inventory management. So in the inventory management, what I'm specifying that, so supplier in the particular time you need to invent that. In simple terms, we can say that. And seasonal demand. As we told in the inventory management, objective of inventory management, we told that on the basis of demand, inventor, that manager has to purchase it according to demands of this one. So seasonal management means according to time, according to situation, according to what you call market pulse, they need to purchase that. So we can call, this is called as a seasonal demand. We will see that seasonal demand, what comes under this one. Demand for goods varies periodically, whereas producers' capacity is fixed. So demand for goods varies periodically, means time to time, the amount, the price fluctuations will be there. So for example, if you are purchasing any good in the market in the month of April is different rate, next in the month of August rate is going to different. So on the base of this is called the periodical changes, the time duration. In the day duration, there is a difference will be there in the price and availability of the goods also. I think this point is clear to everyone. So demand for the goods depends on the time periodically, the capacity fixed. This can be lead to the stock accumulation. So this will be helpful to the stock accumulation. Accumulation is nothing but gathering or getting or possessing, it will come under. Means on the basis of demand, we will get it. Next one. It will be considered for the example of the how goods consumed only in holidays. For example, in holidays, the shops and cinema theaters and different will be open. Of course, working days also. So it's based on, we have holidays. So in the holidays, these goods can be sold more in the market. So during that time, they will try to provide or produce or kept in the market available to the consumers or available to the public. So that is called seasonal demand. On the base of seasonal demand, we need to sell out, it means. Next one, uncertainty. Uncertainty means a predictability. So unpredictability, we can say that one. So we can't say that. Uncertainty will be there. So fluctuations will be there. That is called uncertainty. Uncertainty, it refers that demand and supply. So inventories are maintained as a buffer to meet uncertainties in the demand, supply, or movements of the goods. So it will control uncertainty. What control? Inventory management control the uncertainty. Uncertainty is nothing but demand and supply. In this between demand and supply. So whenever we have the demand, that time we will sell out and supply also. Another point is economies of scale. So this is a ideal type of condition which will complete focus on one unit at a time at a place where a user need and when it is needs it. So this is based on the economies of scale based on principle tended to incur lots of cost in terms of logistics. And another one is appreciation in value. Some situations in the market, the stock required value is kept for some time. So that value is kept for some time. So reach the desired standard or consumption or for production. So that is called appreciation in value. So they will store that products when they have the market in the good demand. So till that time, they will kept in that. So to reach the desired standards, to reach the desired standards mean the desired goals or desired objectives. So these all come under this one. Next concept of this inventory management. This inventory management is essential for market people and the concepts also, the consumers also need it. So in the inventory management, that's important. It will try to avoiding spoilage. Avoiding spoilage is nothing but it will try to control the wastage. So unnecessarily, if manager is here in the market, he purchased more and more goods which cannot be sold out in a particular time or over a period of time, it is going to wastage. For example, over a period of time, fruits and vegetables, this is going to spoil. So on the base of market, on the base of selling capacity, they need to store it. So this inventory management is important for the avoiding spoilage, avoiding wastage. So on the basis of inventory management, they will purchase it. So we can say that one. So selling production that has expiry date. So like food or the other where very real chance to it will be go bad, means it's going to spoil. So this is a help for the avoiding wastage. Spoil is nothing but wastage. Next one, avoid dead stock. Dead stock is a stock that can no longer be sold. So that is called dead stock. Dead stock is what? That tool, that equipment, that a stock cannot be sold out. That is called dead stock. So, but not necessarily because it is expired. It is going to expire and it could have gone out of season, out of style, otherwise become irrelevant. By managing your inventory better, you can avoid dead stock. So we need to manage that inventory such an intelligent way, such a proper way. Then only we can avoid the dead stock. What I said dead stock means, dead stock is nothing but which production cannot be sold out. So that is called dead stock. So to stop, to avoid the dead stock, what we need to do it? So we need to sell out in on time. So that inventory management help the managers and industrial people or the business organization to sold out his goods on time. So this is a important of inventory management. Another one, save on storage costs. So this inventory management helps to storage cost. So where the warehouses will be there, storage houses will be there, often a variable cost. So it fluctuates based on how much product you are storing. So how much production, how much goods you are storing. So that is important. When you are store too much products at once or end up with the product, that's difficult to sell. So here in general terms, we can say that one, storing too much of goods or too much of products in storage or warehouses, it is meaningless. It is wastage. So whatever the amount of or quality or size of goods is going to sold out near days or in future days, on the base of that, we need to store that equipment in the storage houses. So this inventory management helps to that. For example, a mango seller is here. So he can sold out per a day 40 kgs mangoes. So instead of that, the person cannot take quintal or 100 kgs at a time because it is going to wastage or there is no market chances to sold out in a single day. So this is a save the storage cost. So that fellow have to storage in the cool and freeze and refrigerator areas. So it will cost that person. So not only this one, for example, milk and everything will come under, which is going to spoiled in few days, limit time. So this is help for that. So this inventory management helps to in different ways. Next one, inventory management improve the cash flow. So how it is improve the cash flow? Whenever that goods less price we have, we will get it. And whenever demand in the market, we are going to sell out. So the cash flow will be there here. So on the base of demand, on the base of situation, we need to take it. So this is one of the important for the inventory management. So these four elements are very crucial or important for the inventory management. So what are the importance of inventory management? First one, avoid wastage. That is also called spoilage. Second one, avoid deadlock, dead stock. Dead stock is nothing but which stock cannot be sold out. That is a dead stock. Another one is save the storage cost. So according to need, the managers or the industry people, business people has to purchase the goods or commodities or raw material so on time. So this is save the storage costs. So no need to storage for a long time, no need to pay the amount for the warehouses. In yesterday class, we have discussed the different warehouses or storage houses. Cold storage will be there, which are owned by the public, which are owned by the private, which are owned by the individuals. These are different things will be there. So inventory management improve the cash flow. So these are the important of this one. And different techniques we have. Techniques of the inventory management. There are 8 techniques which are very important for the inventory management. What are the 8 techniques? Set par levels and first in, first out. First in, first out means when we purchase the goods first, we need to sold out first that goods. Otherwise, it is going to spoil. Next one is manage relationships. Manage relationships is nothing but with the producers, I mean manufacturing companies, with the sellers and with the business people. So this is a manage the relationship with them. And next concept is contingency planning. So contingency planning, continuity planning we require. So planning is needed for the inventory management process. And regular auditing. So in a business, this is a very common phenomena and important phenomena to auditing. So auditing means what is the loss, what is the profit we are getting. Of course, this is one of the element in the auditing. Next one is accurate forecasting. Accurate forecasting means accurate means exactly. Forecasting is nothing but expecting. So these goods can be sold out in the span of this time. So that is called accurate forecasting. So this is one of the technique in inventory management. So we need to accurately expect that. So our expectations should not be wrong. Our expectations should not be too much. So this is techniques which are common. And consider dropping or drop shipping. So this is also will come under this one. So let me go with all these things in detail. So you can slide in the techniques of inventory management. So inventory management is a customized part of running of organization. So this inventory management is a differ from the organization to organization. So one organization to another organization, there is a difference between that. But every organization may have the main goal or strive to remove the human errors which are committed by the person. We need to remove that. We need to eliminate that. We need to minimize that. So regardless of the system, we need to follow these techniques in the inventory management. So these techniques are set par levels. Set par levels is nothing but make that inventory management easier. Par levels means excellent level, exact level for each of the organizations product. So in every organization, we need to set par levels. So set par levels as the minimum amount of products that must be on the hand of all times. So that should be usable to the all the times is telling that. So it should not be too ideal. So too ideal means not blindly they need to do it. So on the basis of that reality, on the basis of present situation, we need to do the technique. So inventory management, that is a set par levels of this one. So by the productions are based on how quickly that items can be sold, how long it takes to get back in stock. So this is set par levels. So simple. He's saying that we need to do the plans for that particular goods, how sell in the particular time, and how much time it will take to get the new products also. So if you are selling the products immediately in the market, but it will take long time to get back. I mean, that manager or business people has to purchase that goods. It will take a long time. Means in the market, he may face the problems. So we need to see that things easier. So he's saying that check one par levels few times throughout the year. So sometimes we need to check the throughout the years that goods are sufficient or not. That is one of the technique in this one. Next concept of this technique in the inventory management, that is first in, first flow out. So we can call first in, first out. First in means which item has purchased first, it should be first out. First out means we need to sold out first. So letter item you are purchased, that should be sold out in letter. So in this one, the first in, first out is an important principle in the inventory management. It means your oldest stock, that is, it gets sold first or first out, and not the newest stock. Means what he is telling, should not sold out the new stock. You need to sold out the old stock. So we may know the technique about this one. So if they have the old stock, they will give the buy one get one free or 50% off, 70% off. This is one of the technique to sold out the old item or old goods in the market. So this is especially important for perishable products. Perishable products is nothing but which may have the time limit, that is called perishable goods or perishable products. So it is also good idea to practice FIFO, that is a first in, first out for non-perishable products also. So in non-perishable products also we need to sold out. So perishable projects means, for example, we can give the vegetables. Vegetables not more than 1 week or 10 days. If you keep it in the refrigerator or freeze something, then that vegetable can be 10 days we can trade. Otherwise, it will be decay. Otherwise, it will be spoiled. So that will be there. So in non-perishable items, for example, clothes and iron or gold, these are non-perishable items, which are not have the time limit for the wastage or a time limit for the spoil or waste. So that is also, in that case also we need sold. In simple words, what he is telling, in, first out, perishable goods also have to sold out in particular time. It is helpful in the non-perishable items also, is telling that. So these all will come under. In order to manage FOS system, there is need for the organization warehouses. So for the goods preserve purpose, we need warehouses, is telling that. So this is a typical meaning to add the new products from the back, or otherwise making sure old products says that for the forecast. So for if you are working with a warehouse or fulfillment company, they probably do this already, but it's a good idea to call them to confirm. So simple is telling that warehouses where they are storing this one, they need to look after that. These goods, how many days we need to keep it, what is the market availability, or how many days we are going to sell. So that should be there. So this is one of the technique in the business management. And another one is manage a relationship. So as a part of inventory management system, managing the relationship, organization and business people and what you call stakeholders, this is also one of the important. So part of success inventory management is being able to adapt quickly changing situation, whether you need to return slow selling item to make room for the new product. So restock a fast seller very quickly, troubleshoot manufacturing issues, or temporarily expand your storage space. So manage relationship. So when you get the goods, try to manage a relationship with the business people, or in the Chinese system, immediately try to sold out, immediately try to sell them. So otherwise it will face a problem for the, what you call warehouses, storage problem we may have it. Here is telling that. So we need to do that one. So keep in mind space and demand, we need to sell out. So this is a managed relationship. So it's important to have the strong relationship with the suppliers and sellers also, the buyers also, business people also. That's why this is a more willing to work with you the solve the problem. So in particular, this is very essential for the relevant to the product suppliers, goes a long way Minimum order quality is also one of the important element in this concept. So this is a manage relationship. So what is this thing? These are the techniques in the inventory management. So in the inventory management, what we discuss, set power levels, first point. Second point, first in, first out. Third one is manage the relationship. So this is also one of the important of this one. So next one, we can say that one, another concept which has come under next technique, that is a contingency planning. Contingency planning is a lot of issues they are going to face in the inventory management. So these type of problems can be faced or crippled unprepared in the business. For example, sales spike unexpectedly and overselling the stock, run into the cash flow and cash flow shortage, and means shortage in the money flowing, and warehouses problem is also will come under the contingency planning, and the miscalculation the inventory management, and slow moving of products means taking a lot of time to getting or selling this one, and manufacturers time, and manufacturer runs out your products and you have to order to fill. So these all the contingency in planning. Contingency in the planning, it means continuity in the planning. We need to check all these 6-7 elements in the contingency in the planning. Another one, regular auditing. So regular auditing is one of the important element in the inventory management or in the business management. So its success of this one is relying or depends on the regular audit system, regular auditing system, warehouses auditing, goods auditing. This is come under in this one. So there are several methods for the doing this regular auditing. These are physical inventory, spot checking will be there, cycle counting, and example for this regular auditing. So physical inventory. So spot checking, in the spot we are going to there and we will check how many goods we have, how much quantity of goods we have. So this is a regular auditing. Auditing means not only checking the goods and the metal and these things, we need to check the accounts also, the finance things also, which are come under. So this come under the monetary auditing. So a physical inventory is nothing but it is a practicing counting in all the inventory once. Many organizations do this at their end of the year because this ties in the counting and filling income tax. So generally physical inventory they will do the in the end of the year because they will file for the IT. So all the physical inventories are typical only done once in a year. It can be increasingly distributed to the business, and believe me, it is tedious. So it's a very difficult. So end of the year, if they are doing that, it's a difficult, and they may have the problem for that. So due to that, what they are doing, sometimes the business people go with the regular auditing. So daily auditing, quarterly, monthly, off yearly, yearly auditing. Finally, it makes works easy for the auditing to the business organization. So that will be advisable. He's telling that it is advisable. So in physical inventory at the end of the year, we often run into problem. So we are going to face the problem. So that's why we need to do that. Intermediate level type of auditing is good. Intermediate level, whenever it's or monthly or quarterly, that is the intermediate level type of auditing we can call. So this simple means choosing a product, counting it, and comparing the number to what it's supposed to be. So what's supposed to be? How much quantity we need? In what level? In what amount level we need to store this one? We need to have it one. So that auditing is required easier. So this is not done on the schedule, and it is a supplement to physical inventory. In a particular, we want to spot check problematic or fast moving products. So this is a regular auditing method which are come under in the techniques of the inventory management level. So this is an important one. Another one we have here, another technique also we have. That technique is that prioritize with ABC. This is a concept. ABC concept means high value products, moderate value B, and C value product. That's a C. C is a low value products. So priority wise. So in the inventory management technique, priority wise, we need to solve certain products need to more attention than others. Using ABC analysis, let use prioritize inventory management by separating out products require a lot of attention from those that don't. Means simple, we can say that one. We will put the ABC or category wise to the goods and services. So for this one, we will give the option A and B and C. For example, A means high value products. Next one is a moderate value is a B value. C value is a low value products. So this is a frequency of the rate and a sale and what you call the availability of the goods. So these all come under. So this is called prioritize with the ABC. So in inventory management, priority wise, you can sell it. So priority wise, we need to get it. And accurate forecasting is also one of the techniques here. What is accurate forecasting? Accurate forecasting is nothing but exactly expecting something. So the forecasting is nothing but it is an assumption. It's a hypothetical. We can't say it, but we can guess. So that is a forecasting, guessing something. So a huge part of good inventory management comes down to the accurately predicting demand making. No mistakes is increasingly hard to do. So the accurate forecasting is nothing but predicting. Predicting is nothing but expecting demand for the particular XYZ thing. So there are countless variables involved and near notes to know sure that exactly is coming, but you may know it. You can try to get close to this one. Here, a few things can be, we can see that one in the projecting the future sales. In the future, what we can sell out, the seller or the company person may have the idea about that. So this is a accurate forecasting. So in the accurate forecasting, what they will do, it's a trends in the market. So the person will see the market trends. So in the market, it will be sold out or not, you will see that. So that is the accurate forecasting. For example, in the market, if there is no, what you call a demand to that particular good or particular services, that fellow cannot be put in the market because waste of his time. So waste to purchase it one. So unnecessarily he may face the, what you call financial problems also, cost problems also you may face it. Next one, last year sales during the same week. So you need to forecast or you need to expect that. So what is the sales percentage in the last year in the same week? They will see the same week also. Even sometimes in the day by day market level fluctuations, we can see that. So due to that, so we need to see that last year sales during the same week, last year, same day, same week, what is the market pulse, you need to know it. And this year growth rate, how much growth rate we have in the present year or current year, and what is a demand in the market. So that they have to see that. And guaranteed sales from the contracts and subscriptions. So how many people are contractor available, are ready to take it, and how many subscribers ready to use it. So the person has to know it. So this is one of the part in the accurate forecasting. And another one is seasonality and the overall economy. So we need to see the economy point of view also. At the time of financial crisis, we can't imagine that that country or that area people cannot purchase the luxury goods. So if they have the finance problem, how they can get that luxurious goods? So they want minimum goods. So for example, we can give the example, as you all aware of this one, Sri Lanka and Pakistan is facing the finance problems here. So in that country, for wheat powder, so making chapati and roti, these things, people are fighting for that. So they are facing that problem there. So you can't say that when you purchase the gold market, this luxurious cars, this thing, because they are not getting the food grains. How can we imagine that? How can we expect that? How can we assume that? How can we forecasting that the people will purchase? So that is the important thing. It means seasonality is one of the important concept here. And upcoming promotions. What are the upcoming promotions? In the market pulse, we will see that, for example, in the everyday, in the technological gadgets, technological tools, or telephone or something, cell phones, these things, every day there are a lot of changes. New version phones are coming to the market. So we need to see that. So what features they have in that technical, this thing. For example, cell phone or computer or laptop, these things. So this is upcoming promotions, we need to do that. And planned ad spend. So we need to go with the planned manner. So these are the important techniques which are come under the technical inventory. So another one is consider drop shipping. So what is the drop shipping? Drop shipping is ideal practice from the inventory management perspective. So instead of having to carry inventory and ship products ourselves, manufacturers, wholesale take care of its one. So basically, it will try to completely remove the inventory management from our business. So even if just we want to use the dropping, the newest, the test new inventory before inventory in the big order, it can be a great addition to our business. So consider dropping ships also. So where we can discuss. This comes under the various techniques of this inventory management. So let me check again. In the inventory management, we have the number of things. Please remember this. So in the inventory management, what are the techniques we have? In the examination point of view, they will ask the questions. Please keep in your mind. At a glance, I will try to show it again. So inventory. Check it. Next one, in this one, introduction. So what is the meaning of inventory management? We need to check it. Inventory management is nothing but, this is the American English word, and a British meaning it has. It's nothing but goods and material, and the discipline about the shape and placement of this one. So it is also comes under. So inventory management, after the meaning of this one, we need to go with the scope of the inventory management also. So in the scope of inventory management, what are the elements which are come under the scope of the inventory management? We need to check it. Another one, this is the objectives of inventory. So other thing is here, these are the few objectives we have. Balance in the replacement of lead time and inventory values we need to, and forecasting also one of the objective of this one. And another things which are come under here, the time and the seasonal demand and uncertainty also, economy of appreciation in value also important element in this one. And another thing which are come under here, the importance of inventory management. So in this one, inventory management, we have four important elements. That is avoiding spoilage, means wastage. And another thing is that avoid the dead stock. Dead stock means, as I told you, that which goods cannot be no longer can be sold. And another one is save the storage cost. Storage cost is also one of the important element under this one. So that inventory management improve the cash flow also. The cash flow also one of the area which are the come under here. So this is important for the inventory management concepts. And other things which we have here, different techniques. I told you that 8 techniques. Please remember, in the examination point of view, there is a question for the what are the techniques of inventory management. So here, set power levels, the first one. First in, first out is the next one, and manage the relationship with this one, and a contingency in the planning. In the contingency planning, I have told you number of elements in the contingency planning. There are 8 to 10 planning principles there, and regular auditing also there. Regular auditing in the initial stage to what do you call the last level, how to regulate physical equipments, how to regulate, how to audit. So all will come under. So accurate forecasting. Accurate forecasting means exactly expecting that. So in the market level, how we need to get the goods, in what goods will be have the demand. So we need to take all these things and consider drop shipping also. So all will come under the techniques inventory management concepts. So remember, in the next concept, we are going to know about so we need to so these are the 10 techniques which are come under the inventory management. So in the next session, we are going to talk about the what is cost and what is the logistic management, what elements will come under the cost and logistic management. Cost is nothing but price, and logistic management means goods maintaining. It is called logistic management. So it will call cost management and logistic management. So how it will be help in the finance management, we are going to know it in the next class. So once please remember all these three concepts, main three concepts which we discussed here. In the examination point of view, there is a scope for the write the meaning and scope of the inventory management and what are the objectives of inventory management and important of inventory management and the techniques of inventory management also important areas which are come under in the examinations. So please try to remember all these questions. If you have any queries, you can drop the message. So here I'm providing my number also. Okay, thank you. Thank you very much.